Welcome to the Bak Up Podcast, a show on how technology is changing the way we live and do business. I'm your host, Ioannis Bakayanis. Bak Up is ready to start. Hello. This is the first ever Bak Up Podcast, and we're starting off with the Bak Up Log series, where I talk about a topic of my interest and share my thoughts and opinions about it. Have you ever been frustrated with your local bank? Have you ever paid a ghost fee that you have no idea where it came from? Have you ever wondered who is keeping all those large financial institutions in check? Well, you're in luck. Today we're going to talk about what are these regulatory bodies, how banks interact with them, and especially how technology is changing the way these processes work and that interaction is taking place, and especially how machine learning is playing its role into that disruption of the field. So let's get right into it. Firstly, we need to understand who are these organizations that hold the leash to the banks. Well, if they can. This is a bit complicated because different parts of the financial institutions have different regulatory oversight. But generally, there are certain common patterns and common organizations throughout the bank. So we're gonna take a look at the 4+1 regulatory bodies that they're most common in Canada, and they're the federal ones. So going through the web page of the government of Canada. So, within the federal government, the Financial Institutions Supervisory Committee, FISC, acts as the chief coordinating body that sets regulatory policy and supervises financial institutions. The committee is comprised of the Department of Finance of the Ministry of Finance and 4 independent government agencies: the Office of the Superintendent of Financial Institutions, OSFI, the Bank of Canada, the Canada Deposit Insurance Corporation, and the Financial Consumer Agency of Canada. So the Bank of Canada, as you know, is more, or you might not know, it's mostly concerned about monetary policies, rate targets, supply of credit, and all these type of rules. The most prevalent in my experience, which is the regional banking experience, the OSFI and the FCAC. These are the two really big regulatory bodies that I have interacted in the past. And yes, we don't have I don't have anything to do with insurance, so CDIC it's kind of out of my reach. So OSFI plays a key role in supervising Canada's financial sector. The OSFI supervises all domestic banks, branches of foreign banks operating in Canada, trust and loan companies, cooperative credit companies, life insurance companies, and property and casualty insurance companies. The OSFI has set limits on the ability of the Canadian banks to leverage their capital and has set target capital ratios that are higher than the international standard. So generally, the OSFI has the most power out of all those. Well, not in the Department of Finance sense, but from the independent government bodies. I think I believe OSFI is the largest one. And from the other side, the Financial Consumer Agency of Canada, FCAC, is the one that deals with all the customers It's something like the executing body. So when I'm feeling I'm wronged, or I believe there was a breach of trust from the financial institutions or from any other corporation, I can turn to the FCAC and try to find my rights there. So an example that we're gonna talk throughout the episode today is the one of the express consent. So OSFI would say everybody requires to express consent in order to be given a product. So in order for any product of any bank, you need to have express consent for the salesperson to sell you that product. And usually it's either verbal or written. Usually, depending on the magnitude of the product. For example, you have to sign a mortgage. You cannot really verbally agree to it, but you can verbally agree to a credit card, for example. And if you think that your express consent was not given to the bank, you can go through FCAC and say, look, I haven't given a consent to this product and I was charged for it. And then you can start the procedures to reverse the whole process through the FCAC or through your financial institution. At first, usually at first you call the call centers for the financial institutions start resolve these issues in that point of contact. Financial institutions see the potential breach of regulatory compliance as an inherent risk, and in that sense, they treat it as a risk, a regulatory risk. Plus, it can be a reputational risk at the same time. If and right now, the regulators in Canada have the power to name and shame financial institutions that they don't adhere to the rules and regulations put in place. So since it is a risk management issue, uh, it's gonna follow the same practices of managing risk as any other risk endeavor within the financial institutions, and that's kind of correct. How institutions generally manage risk is through these three lines of defense. What are these three lines of defense? Three lines of defense is a schema that the Institute of Internal Auditors came up with some time ago to mitigate risk as much as possible. And this is and that thought is based on the segregation of incentives. So the first line of defense, I think it's gonna be a bit more clear when I'm explaining when I explained what is the three lines of defense, and you see how incentives play a role within um, these three separate lines in order to nullify any potential risks that there are there. So the first line of defense is the operations. So it's the people that they actually do the work. So yeah, imagine that you have to do the work plus carry the operational risk for yourself. It's kind of cool. But yeah, so the people in the branches, sales force, anybody that has to do with the product is inherently carrying a risk, and it has the duty to manage that risk. So and that risk is managed through management controls and internal control measures. That's the two key controls put in place for the operation sides of the first lines of defense. The second line of defense is like an obstruction. It's like an oversight body within the bank or within the financial institutions or with any corporation that has implemented these three lines of defense and oversees the first line. It's independent to the first line, but it's much more tailored to the functions of the first line. And you can see it comprises of financial control, security, risk management, quality, inspection, and compliance. And as you can imagine, compliance is mostly related with the regulatory risk and reputational risk that comes from breaching regulatory rules and regulations. And risk management has something to do with it mostly as an oversight body, generally within the financial institution. The third line of defense is internal audit. And internal audit is a completely separate department within the financial institutions and within any company that has implemented these three lines of defense. And it's a separate body that oversees all all risk, and it's trained from the Institute of Internal Auditors for these type of situations to be able to handle the the processes that carry risk themselves. So, and how this why this thing supposedly works, for example, the first line of defense has the incentive to sell as much products as they can, but still in a reasonable fashion. The second line of defense has their own turf. For example, compliance has the compliance risk, quality has the QA risk associated, and they have their own little pieces that they can own, and they're incented to do better than anybody else that to in managing that small risk. But internal audit is like has a more broad view and more uh, like global incentive of for the whole bank to do well and abide by all the rules and regulations and mitigate as much risk as possible. So you can see that there are different incentives that they kind of come in together and they form these three lines of defense that mitigate risk. But that's a schema that came out of the Institute of Internal Auditors, and at least I kind of find it a bit interesting that one complete line and the most vital part of that pipeline, the third line of defense, is comprised only from internal audit people and personnel, or internal audit qualified personnel from the Institute of Internal Auditors. And it's like blessing our own beards kind of way and making our job secure for the for the future. I don't know, but well played from the Institute of Internal Auditors, and people have embraced that. And the third line of defense is completely made of internal auditors. And I would like to give how these three lines feel. I would like to give an analogy, and that's gonna be a recurring segment, hopefully, within all the podcast episodes. I would try to give myself or the guest that I'm gonna have. I'll try to give an analogy that brings my experience to life and help you understand a bit better how things work in the real world. So, for example, you can imagine the three lines of defense as three siblings, three brothers. So, the first line of defense would be the smallest brother. It would be the one that has an entrepreneurial spirit, goes out and about, is hustling, is trying to get all the toys and be flexible, be a bit shady sometimes, and try. His goal is to get as many toys and as much pleasure out of any of the three brothers. And mom and dad loves him because he has so much energy. He's bringing all the money and he's bringing all the toys in, and everybody is happy. Well, the second line of defense is the middle child. that is very close to the youngest brother, but is still looking up to the oldest brother, which is internal audit. So the second line is falling kind of in between, and it's in sometimes it's in a weird place that it feels like it's the youngest child, but it also times it has to operate as the oldest one. It sometimes it's unsure of themselves. They have some identity issues, and they want to be strong at some points and be more stubborn than they should. And lastly, the oldest child, the internal audit, it's everybody's at least the moms and dads favorite child, because it's so independent, so responsible, within clear lines. He operates, he knows his value propositions, and he's all around, and he works through the lines. He's not gonna deviate and do unpredictable things like the other two. The other two are more, I would say, adventurous. But the third line of defense is like very strict. And now you're gonna ask me, since these three brothers and three lines of defense are working so well, uh, how can even technology disrupt the processes that they go into this risk management process? And I'll tell you, it's not the way they're doing things. It's mostly how they're doing things. So from my experience, the communication and the interactions that we have with the regulators, they're very labor intensive. They're very manual, sometimes without much security and with minimal reporting capabilities. So to unpack that, so imagine that communications go through email or regular mail, if you can like wrap your hand around it. It's 2020. uh or since last time they came in, there were like physical copies of the documents that we had to actually give to the regulators, which is, again, I don't know why would anybody want that. So many trees died at that time. And you can imagine that's not the most secure solution. Like a hard copy, this could bounce around, you can lose it, and or somebody can steal it, or somebody could like see what is what's in the document. And again, these because these documents have to be created every time is new, because new questions come in, new reports come in, and the old reports are this. The template is the same, but the meat of the report changes, uh, and they haven't been automated. There is a lot of work that goes into those little uh, reports left and right. So there is technology can get in there and automate a lot of processes. And actually, Deloitte came in with some areas of the regulatory processes that technology could greatly help um, regulatory procedures. They call this sector of the startup world, or the disruptive world, they call them RegTech companies, regulatory technology companies. And these work in five mostly five areas: regulatory reporting, risk management, identity management and control, compliance, and transaction monitoring. So the bulk uh, of the startup world of these 362 regtechs is within compliance and identity management and control. Compliance because it has so many aspects of it. Compliance, you can talk about regional banking compliance. You can talk about securities compliance. You can talk about so many different things. So broad. Transaction monitoring is mostly geared towards AML, money laundering security, and anti-terrorist financing. So to be able to protect the financial institutions against those practices. Identity management and control is based on I want to know is in the notion I want to know who my client is, and sometimes you can different departments of the same financial institution don't know that they have the same client, and this the client is not consolidated much if the client is not within the financial institution's database and comes from a different financial institution, and it has to be verified. Much so if the person is not from the same country and comes first time in the country, and it has like no credit history, nothing. Can you even give that person a credit card? uh, I couldn't get when I first came here. I couldn't even get a credit card when I first got here because I had no credit history. Risk management is comprised mostly of platforms that they seek to host uh, the bulk of the risk assessment procedures of financial institutions, and mostly they're looking to implement cloud based solutions for the financial institutions. And reporting is something on top of that. That once you have the infrastructure in place, you can start do dashboarding, portals, and reporting capabilities on top of your data. Now, how can machine learning specifically change the field of regulatory technologies? Would be in many applications from those five pillars that we talked about. But let's start with let's stay within the example that we talked about earlier. Complaint express consent monitoring. So we want, let's say that we want to know how many express consent issues a financial institution is having um, throughout time. Right now, I'll tell you that all financial institutions are trying to monitor that particular number of how many express consent breaches they have through complaints. So a person complains and they're describing their complaint, and if it's an express consent complaint and they specifically have asked FCAC's involvement or not, but if the agent that took the call believes that the FCAC would have to hear that complaint, the complaint is tagged as escalated complaint. It goes to FCAC as reporting for reporting. Uh, Express consent is one of those specific instances that banks are required to report any complaints that have an express consent uh, issue attached to them. But The problem is that many times either the person is not describing, the client is not describing well enough uh, the situation. Like I can go and say, you know what, I never wanted that credit card. Like somebody might assume that I, I I applied for it, but at the end of the day, I don't really want it, and I want to cancel it. And it's not that easy to have this type of complaint as an express consent complaint and being reported to FCAC. On the other hand, the person that is logging the complaint might make a mistake because it's still a manual process to escalate a complaint further, and there is a possibility of the complaint being lost in the process. So how can machine learning help in that setting? You could have, and I'm not saying that I have done something like that. I might, but machine learning could help from the source to the very end, the whole pipeline. So you imagine if you have an intelligence system listening to the call between the individual and the agent, if the individual called, or looking at the transcribed text, or the system could look at the if or if the client walks into the branch. Well, right now nobody walks into a branch due to the COVID virus that is out there, but if if you walked into the branch, the person that helped you will have to log that complaint into the system, and the machine learning, the intelligence system could listen to that particular complaint, could see and read the language of the complaint itself. These intelligence systems are called natural language processing models, as the model suggests, as the name suggests. There are specific models that treat natural language as their input. Some other models like treat numbers as input. You can imagine like linear models or functions that we did in university. These models take natural languages as input, and at the output you could say, oh, please, please, kind machine learning algorithm, if you could speed out all the complaints that they are associated with an express consent issue. So you put that objective to the algorithm, and you train it with data that you have collected already, and you could have a model that is predicting from the source without some intermediate, without somebody supervising it and doing that labor of escalating and tagging complaints and escalating to the compliance. And on top of that, you could have reporting capabilities, since it's an automated system, could propagate the results, the output of the model to another to a dashboarding capability, and that capability could work as a portal towards the regulators that could go in, log in with their safe password and username, even with two-factor authentication, and see the results even real time. So that's how machine learning could literally change that process from being a very labor intensive and manual, from automating end to end, from capturing the complaint to reporting it right away in even a real time manner, without any intermediaries in between. Well, you might have some false positives, and you need some supervision on top of it, but and you have some human in the loop, as we call it. But you could have a streamlined process that is not error prone, that is robust, and much more suited in a regulatory environment than what we have right now. or we have. I don't know. I'm not saying anything about my my work. We have solutions about that, but I'm not very comfortable disclosing what are those solutions. But that example would be like an ideal solution on an end-to-end pipeline from capturing the complaint to the regulatory oversight. Unfortunately, though, not all things machine learning are great. There are lots of pitfalls and lots of technicalities, since it's a very new field. Well, new field. It's new to the industry. Let's say that more than stats turning into machine learning. But there are some things that I would definitely want to see being done differently. So if I had to pick like my top three things that I would change about how machine learning is perceived in regulatory processes, I would pick um, machine learning is not fully understood by practitioners and not broadly understood by decision makers. What I mean by that. So machine learning, there are so many people right now that could run a full machine learning model without really knowing the math behind it, because there are so many very nice language abstractions, and I mean language, I mean programming language abstractions. So a software engineer or a software developer could definitely run a machine learning model on top of some data. The thing is that running that, there is the risk of not understanding the input and definitely not understanding the output, and how the input is really affecting what you get in the end. And especially when we're talking about machine learning in financial institutions, where being able to tell a story about the outcome is very important. For example, if somebody rejects your mortgage application, you would really like to know like, why my application was rejected, and not have a machine learning say, ah, I don't know, it just spit out zero. Sorry. We have to be able to understand and not run I don't want to say black boxes, because at the end of the day, right now, even the simplest algorithm most likely works in a black boxy kind of way. But being able to tell a story about the result and how we got there. And on the second, on the other hand, in the decision making process, machine learning is like witchcraft. It's no, there are no leader that there's no leader that really understands what machine learning can do or is doing. And certainly it's not easy to grasp the essence of what machine learning does. But I believe that uh, performance understanding of machine learning models is essential for any business function to work, to understand like what you're getting for your money, and what you're getting from the output. For example, in a fraud detection model, you would not like some accuracy of 90%, because 90%, it's very in perspective, when you're searching through the haystacks to find some fraudulent activity. That number is not enough, and actually that metric is shouldn't be applied to fraud detection algorithms whatsoever. So I'm saying like these things should be a broad knowledge to the people that they're being decision makers on top of these uh, technology functions. And lastly, I want to say that machine learning is neither a friend nor a foe. It's rather a tool, a very powerful tool if used correctly. But right now, there in at least in regulatory in the regulatory world, it's treated either as a panacea, like a treatment to all diseases, or as the devil, the devil himself, because we don't understand it. There are so many question marks. There's so many unknowns around machine learning that people are getting frightened, and they can't really trust a model that they don't fully understand. And we're coming back to the second part. So if I had to summarize my thoughts for today and in under 10 words, I would say machine learning is a great tool for regulatory processes, but it needs to be broadly understood by everyone involved in the process. This is it. Your mind is now backed up. To learn more about the topics discussed or the guests, follow the links in the description. Now you have the chance to subscribe, rate, like, dislike, and review the show. Also, looking forward to hearing your thoughts in the comments. Awesome. Thank you so much for joining me, and see you next time.